hear me just fine right now. Okay, so today's search topic is what are income taxes? Investopedia. Actually, probably go to the IRS. Taxes defined. Okay. Okay, so this is according to the IRS. Oh, hang on. Let's see how complicated real quick. Okay. What is taxable and non-taxable income? You can receive income in the form of money, property, or services. This section discusses many types of income that are taxable and non-taxable. It includes discussions on employee wages and fringe benefits, income from bartering partnerships. Generally, an amount included in your income is taxable unless it is specifically exempt by law. Income that is taxable must be reported on your return and is subject to tax. Constructively received income. You are generally taxed on income that is available to you regardless of whether it is actually in your possession. A valid check that you received or that was made available to you before the end of the year. The tax year is considered income constructively received for that year. Even if you do not cash the check or deposit it to your account until next year. For example, if the Postal Service tries to deliver a check to you on the last day of the tax year, but you are not home to receive it, you must include the amount in your income for that tax year. Assignment of income. Income received by an agent for you is income you constructively received in that year if the agent received it. Prepaid income, employee compensation, child care provided by fringe benefits, partnership income, royalties. I think that is, wow, okay. Hang on, I might want to go to something a little bit more generalized. What is the IRS? How auditing works? Nope. I'm not worried about that. And accounting. What is income tax? An income tax is a government tax. Provide progressive income taxes. Income tax is a government tax on taxable profit earned by an individual or corporation. But then that asks the question, is a taxable income earned by an individual or a corporation? So what is considered taxable profit? Taxable profit is a profit upon which income taxes are paid. Okay, that's redundant. The composition of taxable profit varies by taxation authority, so it will vary depending upon the rules of taxation authorities within each entity is located for a business. Okay, now what are the different types of income tax? Tax valuation. Oh, here we go. Okay. Different types of income tax. Individual income taxes. And then income tax is broken into different brackets. Brackets, corporate income taxes. Payroll taxes are the wages paid as salary. Okay, so these are some. This is payroll taxes. That's something different. So they are not. Taxes. Capital gains is tax is double ink. Okay, that's something else. Taxes is what you buy. Okay, so you have. Okay, so this actually breaks it up into different types of taxes here. First, you've got actual income taxes. Then you have something else, which is individual, which is broken into individual and corporate. But then the next thing is you've got payroll taxes. Then you've got capital gains. Cap gains. You've got sales, gross receipts, value added, excise taxes, property taxes, tangible personal property, estate and inheritance taxes, wealth taxes. Okay. Cool. What are the different? Income taxes. Goes into progressive, regressive, and proportional. Okay. Which are corporate income taxes? Really? The corporate tax rate is flat? Since January 2018, the nominal federal corporate tax rate in the United States of America is a flat 21%, following the passage of Tax Cuts and Jobs Act. Huh. No, I want something authoritative, not. I don't want something that's like some random publication. New for 2023, highlights and changes in revenue procedure. Tax rate. Oh, this is gonna be a dive. Uh-oh. Inflation adjustment. That's just federal income. Okay, so this is federal income tax bracket rates are single file. Okay, this is for individuals. That's not. I'm looking for the business stuff. Alternative minimum tax. We're going to talk about that. Earned income tax. Yeah, corporate taxes really no. Types of business entities are rather tax treatment. Corporation structure. Most commonly used business types in U.S. include sole proprietorships. Unlike other jurisdictions, business entity selection does not alone determine the U.S. classification. Another checkbox. In addition, certain entities such as corporations and LLCs can qualify for and elect to be taxed under certain specialized tax regimes. Transparent entities. There are 4 classes of person for U.S. income tax purposes: individuals, corporations, partnerships, trusts, and estates. Under U.S. tax rules, as under most countries, tax systems, such persons are further classified as resident or non-resident based on a variety of tests. For individuals, the U.S. system treats both U.S. citizens and resident alien individuals as income tax residents. First, lawful permanent residents. Okay, second, individuals are considered residents. Tax rates. The maximum U.S. corporate tax income tax rate is currently 21%. In addition, U.S. states and local governments may levy corporate income taxes on the same tax base, but such taxes are generally deductible from the federal income tax for corporations, subject to certain limitations. The average combined U.S. federal, state, and local corporate income tax rate is just over 25%. However, the U.S. also recently enacted a new corporate minimum tax effective from 1 January 2023 that generally imposes a 15% minimum tax on financial statement income for U.S. corporations, including consolidated groups. With financial statement income of more than $1 billion for 3 taxable years. In contrast to corporations, the maximum income tax for individuals and certain pass-through entities is 37%. In addition, U.S. states and local governments may levy additional taxes on the same or similar income incurred individuals. Okay, so you've got taxes are maxed or capped at 21%, minimum at 15%. Okay. Under certain conditions. So you're going to go back to here. Okay, tax rates. Income, including consolidation with financial statement income of more than $1 billion for 3 taxable years, or $100 million in the case of a U.S. corporate that is part of a non-U.S. multi. So those are for international groups that is combined. Okay, so it's $1 billion if it's local or if it's overseas. Okay, so that's fairly straightforward. Okay, so then you've got persons, deductions, credits. Let's go with the difference between a tax deduction and a tax credit. Tax credit costs both decrease the total amount you pay in taxes. Versus tax deduction. Tax credits and tax deductions both decrease the total that you pay for in taxes, but they do so in different ways. The difference between, well, tax credit and tax deductions. Tax credit is a dollar for dollar reduction of the money you owe. While tax deduction will decrease your taxable income, leading, okay, so this is dollar for dollar. Decreases taxable income. Okay, tax credit Tax deduction reduces how much your income is subject to taxation, usually only if you itemize. The amount of tax credit is adjusted after the tax due is ascertained, while adjustment for deductions is made before the app. While the adjustment for deductions is made. Okay, is adjusted after taxes due. Well, the adjustment for deductions made after is made before the application of tax. Tax credits here doesn't make anything easy on taxpayers, so the answer is tax credit is always better. Why? Tell me. Try to figure out how to maximize your tax refund. Taxpayers cut your tax bill dollar for dollar by the amount of credit. Tax deductions lower your taxable income. Okay. What is better? Tax credit reduce your tax liability by the dollar based on the credit amount you receive, while tax deductions only cut your taxable income. Consider a single person who earns $50,000 and spends $2,500 on higher education expenses and contributes to the 401k. Here's how it breaks down. Taxpayers eligible, tax credit cuts your tax bill by $2,500. Okay. So credit tax rate. That makes sense. Then we've got here we go. Individual, payroll, and corporate. Payroll tax revenue accounted for 84% of government. The percentage of government uses tax. Okay, that's a very, very generalized. Okay. Tax versus payroll tax. Okay, so you've got tax goes to general government funds, payroll tax for Social Security and Medicaid. And then you've got gas taxes. Does income taxes pay for roads? Nearly as much as the cost of building. Okay, hang on. Okay. Here's a good question. How are your state's roads funded? New funding, we plan to take the taxes we pay at the pump. Gas taxes are largely used to fund infrastructure maintenance and new projects, but the amount of state and local road spending cover varies widely among states. It ranges from only 6.9% to 71%. In contiguous states, North Carolina relies mostly on the North Dakota relies on them at least 17 states. tax is low, the same. Okay, so it depends upon where you are. Share of state and local road spending covered by state and local tolls. States cannot relax extractive industries for funding. And user taxes. Spending covered by state and local tolls. Okay, so I'm going to go down to my state here. Idaho is 62%. Okay, so no one's actually at a full 100%. Total user and user taxes. Total tolls, user fees, and user. Total tolls, user fees, and user taxes. Tolls and user. That doesn't make any sense. Okay, something's off here. And the reason I say something's off here is because you look at like California. How is gasoline taxes, licensing taxes picking up 51%, and then tolls and user fees that adds up to 110%, 120% nearly. Same thing here. Same thing here. What are toll users user share of state and local road spending covered by state and local and user taxes? What is a highway trust fund? Highway conduit. Who pays for highway repair? State and local governments provide the bulk of the funding for repairing and maintaining highways and surface transportation in general. For instance, total spending for which is, but the highway trust fund does contribute that same year. Federal government invested $46 billion for roads and highways. Okay. However, funding those repairs and improvements comes from more than just collecting gas taxes. These days, general taxes paid by all taxpayers are just as instrumental. Okay. How the user's pay myth gets in the way of solving American transportation problems. Many Americans believe that drivers pay the full cost of roads they use through gas taxes and other user fees. That has never been true and is less true now. Today, general taxes are paid by all taxpayers, cover nearly as much of the cost of building and maintaining highways as the gas tax and other fees paid by drivers. The purchasing power of gasoline taxes declined as a result of inflation. Roads don't pay for themselves, of course. Okay. So you've got roads, income plus special. I wonder if schools are completely paid by schools funded in the U.S. Public education is largely financed by state, local resources, so overwhelming state and local. Where is this? What taxes? Taxes from public schools. According to Education Week, public funding of school comes from a variety of locals. Approximately 40% of both state resources includes income tax, sales tax, and fees. homeowners. So this is split about 50-50. Schools is also income / real estate. It's about 50-50. And that's, let's see, income, sales tax. Okay. Based on property in the United States, largely based on property taxes because of historical and legal reasons. Why? Public schools in the United States are funded through combinations of. It's worth noting that property taxes contribute 30% more of the total public school funding in 29 states, with New Hampshire having the highest contribution, over 60%. Public schools are primary. One justification for using property taxes to pay for schools, the quality of education provided in local schools improves property values in a county. In a way, homes in particular location are worth more, partly because schools are good. Okay. So there's an excuse. People move into good schools. That's fair to say. With 5 main ways to avoid income taxes. Business, Mr. Can move. Charity. Max out. Accounts take equity instead of payments. Oh, got it. Cash, passive income. Assets and loans. Set of cash, acquire. Okay. Tax credits. Education credits, family tax credits, healthcare credits. Take itemized deductions. Deductions. Okay. Is it possible to pay nothing in taxes? Avoiding taxes legal? Already got it. Okay, that's no, not even gonna have that conversation. If you're trying to avoid taxes by DUI, that's hell no. Don't do it ever. That's the correct answer to that. 6 strategies to protect income from taxes. Okay, so these are all investment strategies here. So unis, gains, Business. Retirement accounts. HSA. Okay. All right. I have to run to the store. It's just research week, so I'll be doing this deep dive. So basically what the plan is here, I'm going to be doing a deep dive on an individual topic about once a week. So probably Monday through Thursday or Monday through Friday, I will be in boring mode, just researching, putting thoughts together in a notebook, and then Sunday I should be releasing an actual video on what I